Investors are asking Plug Power what they're doing to bring their cash balance in line. The company's been burning through hundreds of millions of dollars in cash with no end in sight and relying on government help to keep itself alive. So investors are curious the steps that the company's management team will take to ensure its survival, even if political help is removed with the new incoming administration. So let's take a look at these developments, and these are the things that I think investors need to know about Plug Power stock right now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Plug Power Management saying that they continue to optimize the first global clean energy hydrogen plant in Georgia, which combined with the Tennessee facility provides 25 tons per day of capacity and close to half their current annual hydrogen needs. Now, this is important because if they need to outsource the hydrogen they need to sell, they're paying a higher price than compared to if they manufacture it themselves. So now that they have roughly 50%, that part of its business will come at a lower cost of goods sold, a lower cost to produce. Now, the more they bring online, the more they can lower their cost. But at the same time, it costs a lot of money to build those new facilities to generate those hydrogen needs. Also, since January 1st, they reduced their global workforce by about 15% through the first quarter restructuring and ongoing attrition where we've not backfilled. And I've talked about this a lot. This is a good way to reduce your employee headcount is to stop hiring and let people, because people are always quitting and finding new jobs and retiring. And so if you just don't replace those people that are quitting and retiring and finding new jobs, you can reduce your headcount without having to pay for severance and other disruptions that happen when you have to do a large restructuring all at once. However, if you're in emergency mode like Plug Power, you can't afford to wait on people quitting and leaving, right? You've got to let go of more people more quickly to get your costs under control. And that's partly what they're doing. And I wouldn't be surprised if they need to do more because they're losing so much money on the bottom line so quickly that they need to get these costs under control. They've also finally adjusted pricing across many equipment, fuel, and service platforms, which they're going to start to see their benefits in their third quarter results. And this is part of the problem that I've talked about with Plug Power over the last few years or so that I've been following this company, is they engaged in contracts for sales that were way below their cost. They couldn't survive under those terms. Why they agreed to those terms is up for speculation. It's up for debate. Maybe they thought that it was going to lead to better sales in the future. Maybe they thought that they were going to be able to deliver those quantities of hydrogen at lower price points and thereby generate better profitability. Whatever their thinking wasn't correct, and that's leading to massive losses on the bottom line. Now, as those contracts are running out and they're making new contracts, they are raising prices. And it remains to be seen if they raised prices enough to offset their higher cost. They also are worried that if they raise prices too much, they're going to lose customers altogether, which will put the company in an even worse position. So they have to play this balancing act right now because the organic demand for its products, for the hydrogen, is not that strong. It's not enough to keep this business afloat. It's not enough to support growth in this business, support manufacturing expansion, etc. It's just trying to fight for survival, and it's been this way for several years now where it's just fighting for survival, where the company's expectations are not where it thought it would be. The negative cash flow from operations combined with capex is down year over year, and that's a result of lower spending and lower spending on both capital expenditure and on inventory, as well as a small amount of expansion in the profit margin, in the gross profit margin. All of the other profit margins are negative. The operating and the net profit margin are negative. So based on these changes, they expect the cash burn rate to improve even further over the near term. That's great to hear that they're making improvements even further. But I think what investors would like to hear is a specific timeline of when they will stop losing money and stop being negative. Tell us, okay, in the year 2026, we're going to be break even on cash flow, or in the year 2027, we're going to be break even on cash flow where it's not going to be negative anymore. That's what investors want to hear. If or when it's possible for this business to be self-sustaining, or are they always going to need investors or the government to bail them out because the business itself cannot operate sufficient cash flow? So they're going to continue driving down costs with further workforce optimization, as I would expect, and they're going to leverage the price increases and yield full annual benefits as these continue to expand. So they're going to keep renewing these contracts that expire, and when they're making new agreements, they're going to make them at higher price points with the hope that they don't lose too many customers and they're able to retain some of these customers at higher price points, which will deliver better unit economics for the business. They're counting on sales growth, price increases, improved mix of products, and continued cost reductions to improve their operating cash flows. Lastly, they're also working closely with the Department of Energy to finalize the $1.7 billion loan facility that they've been absolutely praying for, right? This is a huge lifeline for the company if they get this $1.7 billion from the government, from the Department of Energy. This is how this company will survive, is with continued help from the government. Otherwise, the business itself, even with those improvements that they're making and they're highlighting, not anytime soon will they be on self-sustaining footing. So they need more money from the government to bridge this gap, to give them time to get this business on more sustainable footing. And they're working to finalize this facility before the new Republican administration takes office, because the new Republican administration that's coming in is not so excited about all of these green energy deals, right? They're not excited about the tax credits for electric vehicles. They're not excited about the spending on these renewable energy sources. And so there's a risk to the support from the government to Plug Power, and they're trying to get these things finalized before the current administration leaves office. And so by the end of this year, they're trying to get these things completed. It's still a big question mark whether or not they will be able to get these completed so that they can feel comfortable this $1.7 billion will last them a while, and it'll also help them get more money from outside investors, because outside investors will feel comfortable that the company has money already and they have time to get themselves on more sustainable footing. And so they won't feel like the money that they're putting in is going to still not be enough and the company's still going to go bankrupt. So really bad situation Plug Power finds itself in. Hopefully things work out for the company. Hopefully they get this DOE loan finalized, and that will buy them more time to get things on more sustainable footing. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.